Testing, testing. 1, 2. Oil, US oil. So I'm starting to look at materials, commodities, US oil. I want to see what kind of indications it could give us with regard to the SPX. How has it behaved? How has it behaved in the past when we had some SPX tops or bottoms? Okay, and while I'm talking, I'm trying to do the monthly defined breakdown lines. 12-month moving average going up, close below the 12-month moving average, starting to decline, hard fall, pulling back within that downtrend, starting to define a bigger pattern right here at the bottom. And here we'd have some more potential support if it goes through. And the further away, I think it has less sting, less protection. I trust most the ones that are close to breakdown lines. But on the monthly chart, you see strong buyers coming in here on these wicks. This could be a significant bottom right there. So that's the only way to see it. It's in a stage 4 on the monthly chart. And Stan Weinstein style, let's compare that to the SPX. Paste arrow. That was a nice uptrend. Now we're below the Ichimoku cloud defined support. We're in a declining 30-week moving average. Wow. Okay, here's and we're below that monthly defined breakdown line. So this could be a good area to potentially short, guys. I don't have the volume. When the price, see, we're still underperforming the SPX. So, but you have to wait. You need that red candle. You need to close below that declining 30-week moving average. The Mansfield relative strength should be going upwards, and when it starts turning over and heading back downwards, that'd be an opportunity to short. You never short if the Mansfield relative strength is going upwards, and you never want to go long when it's going downwards. That triple confirmation from Stan for breakouts or breakdowns, it is very, very powerful observations he had. If you just would base on that, going long when it's green and going short when it's red, without even all the other weight of evidence, most of the time when you start having an inclining 30-week average, you're in a nice stage 2. And when it starts declining or one of those 3 conditions, you're out. Really, that's the goal, to get those. Okay, US oil. So what about if I put you back on the monthly? I add your little friend. This button. Add your little friend, SPX. I'm going to do half. Close that. I'm going to try to do a setup. Lines, candles, and I'll put the 12-month moving average. So right here, moving average. Inputs right there. All right. So let's see when I had a change in trends. Okay, let's go back all the way to 2001. Oh, that mountain. Whoa, there you go. So we had here a small stage 4 for oil right there. We're below the 12-month moving average, really in the stage 3. And when it broke down, the market has already been, oh, not that. Let me check. Here's my top, my SPX top. It was already declining. So really here, the correlation between the oil, God, that's what I should do. US oil. No, SPX. What? try again. Pat. Indicators. Right there. I don't know. This one here. Sorry. Okay, SPX. There you go. So when it had that breakdown, monthly defined breakdown, you were in a period of higher correlation with the SPX. And let's move the chart. And then after that, 2007, 8. When did this thing peak? It ran right through. Wow, I was really getting away from that 12-month moving average, going upwards. Was it tweezer tops? A little bit. It's hard because I always go back down when I see that red candle. I know that that's some monthly defined support where the market said, no, you're not closing below that. Why is it coming from all the way there? Whoa. Right there. And I'll remove that. So what do we have here? Okay, we're way farther in the advance, in the decline. So as oil was peaking, you see here the inverse, we're starting to lose our correlation. SPX going down and we're doing a bust. We're going to the moon's explosion scenario. And after that, we came back synchronous. On the way down, we started getting that correlation back together. And until we came back into this like power zone. When oil and the markets are... Oh, got to reset that chart. Reset. When oil has a high correlation in bull markets with the SPX, and when you start going into negative territory or you start to lose that correlation, here you have oil going down, but the SPX barely going down. Just maybe a leading indicator of this slowdown right here. Not as fast right here. It was really, it led just a little bit. Now it seems to be leading a lot more here for 2015, 2016. You see as the price action goes down. SPX, we had those two dips. And where are we today, guys? That mountain of the 2008s. Hey. What is wrong with TradingView? All right. So now it broke down. The markets started following after. Didn't really top very, very close. Right there. I think that's where we topped. And when did the market is breaking down right here. So just a little bit of leeway. See, when we broke down here, we actually had same type of leeway. So oil always peaks before, and that could explain. So if I'm a bear, I would want the oil to keep going down. And the longer oil goes down before it starts resyncing up and going in an uptrend with SPX. All right, I'll have to dig back. This is good. 2008, 2001, and starting to see the behavior. I hadn't really looked at the behavior of oil and how if it was its peak always before. So I don't know if there's a call. If we think oil is going to go even higher, then we could assume that the SPX is going to probably go up until oil really peaks, and then when oil goes down once again, then bring the stock market with it. But I think we're already at the 2008 level here. I think we're at the 2001 level. So I guess we'll have to wait and see, guys. Okay, that's it, US oil. Hope you continue your stage 4 down.